The earnings number should be fine this year, that is for FY24, more led by the fact that you are seeing significant improvement in profitability for the consumption-led or the consumption-oriented sectors. It's not really led by top-line growth or volume growth. What we have seen is a big decline in raw material prices starting from, let's say, the June quarter of last year. And since then, you have seen a remarkable improvement in profitability or EBITDA margin across the consumption sectors. So that is what is driving the profit growth for this year, not so much as a top line or volume growth. In fact, the volume numbers continue to be pretty disappointing. And we saw the numbers for Colgate and Labor, they're all flat to 2% kind of volume growth in the September quarter of this year.
Right. What does that mean for absolute market levels then? Because we are sub 19,000 right now.
If you look at the market, it's basically not three markets, to be honest with you. You have the large caps, which have been in some sort of a bear market for the last 2 years. If you look at the Nifty 50 index, it has actually given only 5% return over the last 2 years now. Then you have a reasonably strong bull market, I would say, in the rest of the large cap and the quality mid cap, which have given much higher returns over the same time frame. And then I think you have a complete bubble market in the mid cap and small caps, which have gone up significantly over the last 6-7 months in particular without any meaningful change in their fundamentals. So focusing on the large cap oriented index, which is the Nifty 50 index, we are reasonably comfortable with the valuations over there. It's currently less than 18 times on a FY25 basis. Assuming the earnings numbers come through, and we are okay with earning numbers for the time being. We could see possibly some downgrades in the IT sector and some other global oriented sectors, but otherwise, we are okay with the numbers. So I think there is value in the large cap names and absolutely no value in most of the mid cap and small cap names, which have gone up a lot without any meaningful change in the fundamentals.
Right. You're talking about something very interesting. You're seeing essentially highlighting in your notes that India is seeing sharp improvement in the overall employment rate. Could you explain that? Could you elaborate more on that?
Well, that is, improvement as far as labor force participation ratio is concerned. This is based on a survey done by the government periodically. So that is the good news, Tanvir. But the sad news is that the quality of new employment is rather abysmal. In fact, it seems like more jobs are getting created in agriculture and household enterprise rather than in the regular, salaried or wage category in the manufacturing and services sector. So that is a challenge in the country. Even though you are seeing meaningful job creation, the quality of jobs is not that great. And if you look at the wage growth, unfortunately, over the last 4 years has been pretty muted, both in the regular wages/salaried sector as also the casual sector, which is what is really impacting consumption. On the other side, you also have fairly high levels of inflation in the country for the last 4 or 5 years now. So given the combination of somewhat muted wage growth and very high inflation across goods and services, your consumption numbers are really struggling.